Today we're looking at three important U.S. headlines in Forex Factory and what they mean for the gold and silver markets. First, Federal Reserve Governor Christopher Waller said the U.S. economy is feeling the squeeze, and he signaled that he supports a possible rate cut in December. Second, President Trump claimed inflation is down near 2% and could possibly fall toward 1%. And third, U.S. jobless claims came in at 232,000, showing that the labor market is starting to soften. So, what does all this mean for gold and silver? Whenever the Federal Reserve turns dovish or the labor market shows signs of weakness, the market starts pricing in lower interest rates. Lower rates usually push real yields down and weaken the U.S. dollar. That's generally positive for gold and silver because the opportunity cost of holding these metals drops as interest rates come down. So, Waller's comments and the rise in jobless claims both create a supportive environment for metals. Trump's inflation comments can calm some inflation fears, which might temporarily slow safe haven demand. But political statements don't move gold the way real economic data and Federal Reserve decisions do. So overall, the net impact still leans toward bullish for gold and silver. When you combine these three headlines, the picture becomes clearer. Softer labor data plus the possibility of a December rate cut can push gold and silver higher. Momentum may build if the dollar weakens and real yields continue to slide. Now, what should traders and investors do? If you're a short-term trader, watch the US dollar index, 10-year real yields, and any new statements from Fed officials. Volatility around news events is high, so use smaller position sizes, tight stop losses, and wait for confirmed breakouts. Buying dips can work well when rate cut expectations are strong. If you're a swing trader, stick to your support and resistance levels. Scaling in on pullbacks is effective for gold, while silver requires tighter stops because of higher volatility. Avoid entering trades based only on headlines. Follow the actual market structure. For long-term investors, this environment is usually positive. Gradually accumulating small amounts of gold or silver can act as a hedge against policy uncertainty and economic slowdown. Finally, this is educational content only. Markets react fast to new data, so always manage your risk and avoid oversized positions.